Hey everybody, how are you? What's happening? Some people are going to start trickling in here. Adam, how are you? Alright, so for those of you who don't know me, I'm Jeff, Swing Trade Warrior with warriortrading.com. I'm going to turn a light on so I don't look so creepy. Maybe the light helps a bit. Alright. I'm going to go over the swing trade watch list for tomorrow. I actually haven't even made it yet, so I'm going to make it live right now. I always get questions from people on how I determine what I'm going to trade tomorrow, how the watch list making process works. I go over this in the swing trade course a bunch, but I'll go over it in real time for you guys right now. As always, if you guys have questions and you're watching this on playback or something, you can shoot me an email, jeff@warriortrading.com. For those of you who are watching this live, feel free to just ask me any questions you have in the comment box. Alright, so we'll jump into this because this can take a little while if we aren't efficient with our time. The first thing I do is I run my scans that I have over here on the left-hand side. This is TC2000's charting software. My favorite charting software is eSignal, but eSignal you can't really run your scans in, so I built my scans inside TC2000 for most of the trading that I do, and as a result here, we run all our scans in this software platform, and we also do our charting from there. So you can see the green here are the long bias scans, and the red are the short bias scans. I also use Trade Ideas Pro to help me find other swing trade opportunities as well. But for right now, we're going to start with the swing trading strategies off of the TC2000 scan, which is also the small cap strategy that I like to use. If you guys were watching my broadcast yesterday, you saw the alert, or you saw that I put PMTS on the watch list. You can see that today it popped up about 7-8%. 8%. So if you traded this off of the watch list last night, it was a nice 8% winner. But I didn't trade it. I did trade BMY. This was one I had on the watch list yesterday. It sold off. You can see I was trading it to the short side. So I used a bear put spread, and we were able to make some money here once this $58 area broke. And we're still holding this, and we're up about 15% on this trade right now. So this one will pay us nicely tomorrow if we get some continuation. Currently, we're also long some Visa. You can see Visa here putting in this nice flat top here into this $81.20 area, $81.20 area. Once it breaks, we'll see towards $81.75, just over the highs here, and back toward $82. So we're long this trade. We're up about 5% on this one right now, using a bull call spread. And so if you're not familiar with options, I'm going to put in the box here a little cheat sheet that I made for the option strategies that I trade. If you guys haven't had a chance to take a look, you can check out that link later. So right now, we're going to look at the results of the scanner for tomorrow's trade ideas. I explained to someone today who had some questions for me about how I go about choosing stocks to put on the watch list, and how I can, why I put on so many trade ideas every day and I don't trade them all. Well, first of all, trading responsibly and profitably is one of the big components of that is risk management. Risk management entails not trading everything just because there's an opportunity. Sitting on our hands is critical. Discipline, holding ourselves back from that compulsion, that urge to put our money into a trade. We don't want to break the distinction between a trader using sound risk management techniques and a gambler who's just looking to capitalize on any opportunity they can. Right? We're definitely looking to be more disciplined than that. So one of the things to keep in mind is as swing traders, when we're going through all this stuff, we should be able to, and I go over this in great depth in the course, and I tell all my students, you should be able to talk yourself out of more trades than you ever end up taking. If you talk yourself out of more trades than you end up taking, that means they weren't super great trades to begin with. And like today, we had a bunch of names to the long side that I liked on the watch list yesterday, but when the market opened today, after the first 15-30 minutes in the open range, it started selling off, and all of a sudden, I had a reason not to take those long trades. I was able to talk myself out of them. What I couldn't talk myself out of, though, was a short trade on BMY, Bristol Myers, and as a result, we got short Bristol Myers, and now you can see that this thing had a big down day today. We made about 15% on it. Still holding it for tomorrow, looking for some continuation. It's made new 52-week lows here, and so we're looking, or just about near 52-week lows, so we're looking for continuation of this, and it'll be a nice winner. Couldn't talk myself out of it, so I took the trade. It's just there were five trades on the watch list, 4 or 5 trades on the watch list, but I'm not here to trade them all. I'm just looking for the best of the best. In order to be profitable, we have to stick with the statistical probabilities that will lead to success, and by not over trading and being very selective, we're able to do that. All right, so the first scan result here is OREX. This is not a good setup. You can see this dark green candle indicates this thing gapped up today, and not only did it gap up, but it sold off all the way down. We're going to look through. I'm going to flip through some charts here until I find a stock that isn't extended, that looks to be a good setup. Here's an interesting idea. Not the best setup in the world here. We have a giant bear flag on the IVB. If you remember from yesterday's broadcast, I said that IVB is the NASDAQ sector ETF for biotechnology stocks. IVB got pummeled when Hillary Clinton came out and tried to interfere with the U.S. economy and how FDA approval works. And so as a result, where's that stock? Right here. As a result, most biotechs sold off. However, one of the ones that didn't is OVAS. This is Ovascience. You can see it's trading here beneath a fairly large technical area at the 650, 670 spot. There is an opportunity here. There's an opportunity here, potentially over 630 or so. And we have a window back to about 650. I don't know, what is that, 660 or so. If you zoom in here, you can see we would look to break the highs of the recent range. The high of the recent range is actually right here at 629. What? 629. So anything over 629 will put us back into this window that has room to 657 or so. Not a huge area, not a very big target. So we'll see if we can find a better name. Remember, we're talking ourselves out of trades. There's not a lot of good-looking stocks just yet. All right, here's one I like. Okay, so GNCA. Couple things to note here. One, super low volume stock. Only 140,000 shares traded today, and it looks like that's probably the average, right around 100,000 to 300,000. Now, important note to make here: my scanner filters out stocks with a 5-day average volume of less than 150,000 shares. So, for whatever reason, today was a low volume day, but historically, this thing is a little higher volume. This is a decent looking chart over the 550 area. You can see pretty clearly here that that area is a large pivot. It's an area of significance. We haven't really traded over that area since back here in March. We had this big, huge volume spike up. The thing ran almost 100%. So we're looking at this here potentially for a breakout over 550. We will probably look to get in a little before that here. Today's high of day was 542, so maybe I'll buy, it's such a light volume, maybe I'll buy a couple thousand shares here at 542, 543. I'll look to add to that over 550, so I'll buy again at 551. And once we can clear this 566 high, I do think we have room all the way back towards $6. So about 50-cent window there in which we can profit. Why 50 cents? Well, once you get over the $0.50, you can see that there's just not a lot in here until back here in April, where we see support at this $6 area. Remember, I told you yesterday that previous support will become future resistance, and previous resistance will become future support. Well, this area of support is going to act as resistance. On a $5 stock, if you get a 50-cent move, that's a 10% move, and that's pretty good in my book, so that'll be our target on this trade. And I'll put this guy on the watch list over 550. I'll get in 545. I'll get in again 550. I'll have an average around 547 or so. And we'll look to sell every 3 to 5% on the move through $6. Let me add this one in here. GNCA. All right, see what else we got. Man, there's a lot of crappy setups. Today wasn't a good day overall for a lot of stocks. The market sold off. It wasn't a horrible day in the market, but not a lot of stocks were moving up today. So you're going to see a lot of kind of crap setups here. TK Tankers, it's an oil shipping company. They also have a couple other subsidiaries. I've traded this one with a lot of success in the past. It's a very liquid stock. It trades millions of shares a day. It's cheap, but it doesn't necessarily put in the largest of moves. However, it's trading at a pretty significant level right here, again, under the $0.50. If you remember from yesterday, I told you that the $0.50 and whole dollars on small cap stocks tend to be areas of significance for those stocks, psychological areas of significance. This is no exception. This has a potential, I think, over the 750 area. Let's see where our target would be. Right there. Let's see, that'll be our ultimate target. All right, let's see. If we got long on the stock over the $7.50 mark, we would have room ultimately back to the $9 area or so. Why $9? We can see it's an area of big support back here where the stock was trading above it in May. Bounced off this level a couple times before finally breaking down and moving through. And you can see before that, it was an area of resistance. So this, for whatever reason, is a technically significant area on the stock. It acts as a pivot. This is not something that particularly excites me. We do also have some areas of significance. Let's see, much closer here around the $8 area. Remember, the stock is going to respect the average true range, which in this case is 37 cents. So we're going to see a move between 37 cents, 30 and 40 cents a day. So we know that it's not going to go from $7.50 to $9 in one day. So we should look for more intermediary targets. The window is definitely to $9, but more realistically, we'll probably see a move to $8 if the 750 level falls. It's an oil and gas name, not my favorite to trade because oil is so volatile right now, but overall, this is not the worst setup I've seen, so this might be worth keeping an eye on tomorrow. We'll see what oil is doing in the morning and whether or not we like TK for a move over 750. What's up, Trader Guy Dude? Welcome. All right, so we're into stocks here, looking at stocks here that have hit the scanner, so they're meeting the criteria for the type of trades that I like to see, but unfortunately, these are, we're starting to get into the 6, 7, 8% movers. I teach in the swing trade course that small cap stocks tend to move anywhere from 5 to 15%, 5 to 20% over a period of 3 to 5 days. So the scanner looks for stocks that are under $10, ideally under $10. It will scan stocks under $20 that are in day 1 or 2 of a breakout move. And I identify a breakout move by a 4% move at high relative volume. So all the stocks that hit this scanner are going to move at least 4%. Now we know that because statistically speaking, these stocks will move for 3 to 5 days at a time, and they'll move 5 to 20% during that time. That after they've made a 4% move, they're damn near into the average range of their breakout expectancy. So if a stock has moved 10% in a day, is it a good swing trade? Well, if we know on average that it's going to move 5 to 20% and it's already moved 10, how likely is it going to move another 5 to 10%? The higher the percentage gets, the less likely it becomes. Therefore, it becomes a lower probability setup. So I don't really scan for stocks over 5-6%, or I don't really look at stocks over 5-6%. This one is 7.6%. It's not my favorite. It's, in my opinion, a little extended for a swing trade, but that doesn't mean there's at least a day of opportunity for either an intraday trade or an overnight swing trade. So I'll keep it on the watch list. Like I said, if oil has a big day and this thing gets over 750, there will be an opportunity for a trade here. This is a decent chart. Especially today, we crossed over and held the close at the 50 moving average. All right, so let's take a look here at, I'm going to see some of the other names that popped up, some of my other scanners. See a lot of bank stocks popping up, Citigroup today popping up. You can see Citigroup here is testing a pretty significant level at $48. Why is $48 significant? I don't know. I didn't pick the area, but you can see it tested the price back here in end of April. It's testing it right now. This is resistance, but if you zoom out, you can see that it was also support. Like I keep saying, previous support becomes future resistance, right? So this will either fail at the $48 level, it'll sell off, or if the market holds up and bank stocks and financial sector continues to rally, it'll break out over the $48 area. We'll see a little bit of a squeeze and probably move into this $50 area. $50 be the next target on this stock. But as you can see, $48 is a very significant area here, big old area of resistance because it was a big old area of support. Stock price, when it's trading above this level, held that, respected it fairly cleanly. And now, conversely, when it's trading below it, it's respecting it to the upside. Not interested in a trade on that, just an interesting chart. IQNT also hit one of my other scanners, and to be honest with you, it's kind of extended to the long side. If you look here in the last week or so, it's moved 10% to the upside, and it's put in 1, 2, 3, 4, 5 or 6 green days. Remember, these stocks are going to move on average 3 to 5 days in a row when they're trending, and they're going to move 5 to 20%. So this one is pretty extended and chasing right now. So we need to wait for this to set up here and give us something else. GPS, this is Gap. Gap I traded several times this year for earnings. I've never traded it to the short side specifically. We do have a pretty big move to the downside. You can see today it sold off following this bull flag. Broke the bottom of the bull flag here at $26, $26.25, and it sold off all the way down to the 200 moving average. The 200 moving average being this yellow line. You can see that it's acting as an area of support. If the 200 moving average were to fall, you could see a continuation of a move lower, probably down toward at least, what is this right here? At least 2430, maybe 2380. A little move to the downside. One of the things that's important on Gap, you look at this big old window right here, and you say, yeah, I want to get short there, I want to hammer that. Well, it's really not that big of a window. I mean, this is a total of about 60 cents. This thing only moves 64 cents a day on 6.8 million shares. So there's not a lot of room to the downside. It's just one of those that's very liquid, so you can take a little bit more size on. You'd be able to get in and out of it, and you'd be able to capitalize here. They put in a $1.14 move today to the downside, which is almost double the ATR. Something to keep in mind. Today was an exceptional move. This thing normally doesn't move with this kind of size, so not a lot of opportunity there unless you take big size. $25 stock, take 1,000 shares, that's $25,000. You take 2,000 shares, it's $50,000. You get a 50-cent move on 2,000 shares, you make $1,000. Is a $1,000 profit worth investing $50,000 into a trade? Maybe for somebody, but for me it's not. I think there are better opportunities out there. All right, interesting. So you can see that the gold and silver commodities have been getting hit pretty hard here. You can look at these three stocks in a row have nearly the same chart. We have RGLD, Royal Gold, FNV, and then SLW, Silver Wheaton Corp. They have all just about the same setup. Just like I don't trade oil, I don't trade gold or silver. It's too much tied to macroeconomics factors. It's not really a technical trading stock. It's kind of just tracking the commodity. And so the commodity is subject to inflation risk. It's subject to macro and microeconomic risk. There are too many variables that you can't control. When you're trading a stock, you have enough risk as it is because you're worried about it filing for bankruptcy while you're holding the position. You're worried about the CEO getting arrested. You're worried about a buyout or whatever, any kind of filing that might screw up the company's stock price. You have enough things to worry about. But when you start trading commodities or commodities ETFs or companies that are reflecting commodity pricing like gold and silver, while it's fun to trade gold and silver companies, not only do you have all those same risks, you have inflation risk, legislative risk, legal risk, systematic risk, unsystematic risk. You have all the different risk types associated with trading a company, but now they're also tracking a commodity which is going to be influenced by a bunch of other things that a company like Apple or Facebook or Netflix might not ordinarily care about gold or silver prices. So your risk tends to increase when you're trading these commodity-based companies. That's why I don't trade oil stocks. That's why I don't trade oil stocks. That's why I don't trade gold and silver stocks. If I want to trade the commodity, I'll trade the ETF. So I trade this. I trade it directly. I don't want to take on the extra risk of a company that's tracking the commodity in the first place. AEM, another example. NEM. I mean, look at all these charts are almost identical. Right? So why do we want to, how do you pick one when they're all doing the same thing? These are all individual companies. These aren't ETFs. These are companies, right? These are people, with boards and employees and earnings and everything else, but they're not acting independent of anything but the gold and silver prices. So why buy a gold stock because you like what they're doing or whatever? It's not going to matter. It's going to do what the underlying purpose is. And that's as a gold or silver stock, it's going to be tracking that commodity. So if you want to trade the commodity, screw the company, trade the commodity. All right, moving on here. This is an interesting setup. Very similar to BMY. BMY, Bristol Myers, I told you about that trade. That's the one we got into today that we're up 15% on. It's a short call. This is also interesting for a short-sided move here. We have this big, relatively large move to the downside, 5.7%. I'd have to look into the news to find out why it moved down. But it's testing this $24.20 area of support. Why is this area support? I don't know, but for some reason people seem to think that it is. It tested this area once back here in early August. It's tested this area back in February. It pivoted around this area in January. If I zoom out further, hasn't really been at this area for quite some time. But let's see what happened the last time it broke down under this level. Well, you can see back here in June, after it broke this level, it dropped a couple points to $22. You can see back here in May when it broke through this level, it dropped all the way down to $21. So there may be an opportunity here for a move to the downside if this area around $24 fails. So I'd put this on the short watch list for a move under the 24. Let's see, what was the low today? 24.23 was the low. I'd say under $24. $24 breaks. We could see a pretty quick move down to 23.20 and then potentially down to 21.50 or more. Let's see. Not a horrible setup here. Again, this is a very bearish setup. This is only something I would be interested in trading if the market is continuing to the downside. As I told somebody earlier today, because I put 5 stocks on the watch list, it doesn't mean I'm going to trade 5 times a day. I'm taking 5 different swing trades, right? I don't know what it's 7 o'clock here. I don't know what the market's going to do tomorrow. I don't know if it's going to gap up. I don't know if it's going to gap down. I don't know if there's going to be a terrorist attack in Alaska, or somewhere on the other side of the world that's going to affect our markets. I don't know. But what I do know is that I'm going to have setups ready to go in the event that the market is up and the market market is down. And if the market is down, then I'll have a short bias setup. If the market is up, we'll have some long bias setups ready to go in either direction, no matter what. And just like today, we had 5 names on the watch list. Only took one of them. It was to the downside because the market was down. And, we're up on the trade. Part of trading, like I said, is talking yourself out of trades, not taking trades just to take trades. So it's important to remember that. And as a result, I have ideas for both long and short. Don't care what happens tomorrow. I'm ready to go either way. I'll have an opportunity waiting for me. Tomorrow is, looks like Wednesday. I'm just checking the earnings. Tomorrow, Jack in the Box has earnings. It looks like C-Trip has earnings. Infoblox has earnings. CRM has earnings. Salesforce CRM has earnings tomorrow as well. So I'm going to look to put on some iron condors. Potentially for some of those names as well. I do like to trade the iron condor strategy for earnings. If the opportunity presents itself, I outlined that strategy. For those of you who are interested, I put the link in there earlier under the options. So you can see at worrytrading.com/options. You can go in there and see how I set up iron condors. But there are a few names tomorrow that are worth looking at closer. So beyond the earnings names, CRM, Box, and C-Trip, we'll also be watching GNCA, TK, and CAL tomorrow as well. So we'll have about 5 names on the watch list. Maybe we'll take 1 or 2 of those trades. Hopefully we'll lock up our Visa and BMY positions, looking to take 30 to 50% on those option spreads. And we'll see what the market gives us tomorrow. Sound is stuttering, he says. I have the gain turned up. Not so sure what the issue is with the sound. I still can't get my webcam to work, so I'm having to use the computer's built-in cam. But we're still working on some tech issues here. Hopefully we'll have them sorted out. It's been a couple weeks since I've been able to broadcast regularly anyways. Adam, you definitely ruined it. But thanks for stopping by. So once again, I'll type in the tickers here. We're looking at TK, GNCA, CAL, CRM, C-Trip. What else? All right, cool. All right, guys, that's it for today. Remember, when we take these trades, or when I take these trades, or I alert these trades for stocks, I'm only looking for 3 to 5% of my investment, return on my investment, and for options, I'm looking for 30 to 50%. Why those numbers? We talked about it yesterday. It's important to track your metrics and understand your trade performance. Statistically speaking, on a breakout stock, we know it's going to move a trend directionally for 3 to 5 days, and during that time, it'll move for 5 to 15%. I'm only looking for 3 to 5% move. I'm not trying to get greedy, and I'm not trying to stay in the trade past my welcome. Just get my 3 to 5%. I'll move on to the next one. I do this process every day. It's repeatable. It doesn't take that long, and it makes a lot of money. So hard to complain. Options trade, same way, 30 to 50% return on those. And if you guys have any questions and you're watching this later on, you can shoot me an email, jeff@warriortrading.com. Always happy to answer your questions. If there's nothing else, I'm going to go eat dinner. And I'm going to send out an email to all our subscribers here for tomorrow's watch list. Thanks for stopping by, guys. I will have, hopefully, the audio and the video figured out by tomorrow. But we'll see what ticker support has to say. Thanks, guys.